And joining us right now to talk more about it is Steph Wissink, a research analyst at Jefferies. And Steph, we didn't give you much time to look through these numbers, but there's a lot to kind of digest. What Courtney was just talking about with raising the average wage that they have there to above $15 an hour, making $14 billion in investments. And I think it's interesting, if you look at the investments that they're talking about, they say it's to build the supply chain capacity and automation to stay ahead of demand. Raises a lot of questions on its own. What do you think, just at first blush?
Yeah, I concur with Courtney's assessment. I think this was a little bit of a mixed bag this morning. Clearly, the headline number on comp was very strong. And actually, it was across all of their operating units. Even Sam's Club saw a nice comp in the quarter, with membership growth up almost 13% as well. So I think all of the indications around the health of the top line seem to be pretty strong. To your point, it does seem like Walmart is taking this opportunity with the tailwind of COVID, increased proximity to the consumer, and continuing to be that destination for consumers to really amp up their investment spend to make sure that they are competitive and that they can meet consumer demand. I do think it's interesting as well, putting right in the top headlines of the release, the commitment to wages. And I think Walmart in many respects does set the standard. And so we're going to look at how this might affect retail more broadly, with a higher minimum going to $15 on average across the U.S.
Hey, Steph, I remember several years ago, this is going back, it must be almost 5 years now, when Doug McMillon came out and said that he was going to be investing in the stores and investing in the people and raising wages. And it came as a bit of a shock to Wall Street. He said that at an investor day. And when the street found out how much it was going to cost, it took the stock down pretty significantly. This seems like another moment where Doug McMillon is saying, we're going to be doing these investments. You would think he'd maybe won some credibility with investors based on his last investments and how they paid off. It really made the company be in a position of being ready to kind of pivot much more to online sales. What do you think this time around?
Yeah, I think it's probably something similar. Again, I think Walmart sets the standard across retail, and it is in many cases the biggest employer, as Courtney mentioned, in some small communities as well. So we know that there is a flywheel effect. As wages go up, spending power goes up in many of these local markets. So I do think Walmart is probably somewhat of a beneficiary on the backside as well in terms of the higher sales and better opportunity. I also think, to Courtney's point earlier too, Walmart is investing in other areas of the business that aren't necessarily directly related to the store footprint. So we're looking at things like healthcare, which are tied to the stores, but are an appendage or an adjacency to that, investing in media, investing in advertising, and advertising platform for their vendors. So there are some other counter effects that could develop. Maybe that would be somewhat different than 5 years ago, that could help to defray some of the headwind from rising wage and also rising investment. So I do think there are some counterpoints that we need to give some attention to today. And I would expect the Investor Day is going to focus on some of those as well, to help kind of lateralize some of the effect of some of the rising investment that they're doing.
Shepard Smith here. Thanks for watching CNBC on YouTube.